Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate Show podcast that we do every Wednesday morning. I'm Harvey Freed. Next to me, Lisa Lawson. We're sharing a phone, Lisa's phone for the Zoomcast. John Kolb is joining us, one of the top mortgage people across Southeast Michigan in many states. Hey, John, what's happening?
Not much, not much. Happy Thanksgiving to you all. Haven't seen most of you since the holiday, so hope everybody had a happy and healthy Thanksgiving.
Thanks, John. That's great news, John. And of course, there's a lot going on here in Southeast Michigan. Winter's kicked in at full, even though it's still fall. It's officially winter here. We got some snow on the ground here, and we got a little action going on here. I thought there was going to be a little bit more debt consolidation loans, but I think with a little drop in interest rates, maybe that buzzword will get some people to take a look at their overall financial picture.
Yeah, we've gotten a few calls, and sometimes it makes sense for people, and sometimes it doesn't. But you have to do the due diligence and crunch the numbers. And obviously, if we can save you money, increase your cash flow, possibly even shorten or keep the same term that you have left. So maybe you've paid on it 5 years, we can put you in a 25-year, so you're not extending it. We got to review all of these things and make sure that it makes sense for you. But yes, there's still quite a few out there that definitely can take advantage of a debt consolidation loan or cash out for home improvement.
Yeah. And John?
I was going to say, and leading with that is that houses are still appreciating. I think they're gauging from the beginning of the year. We're at I think, is it 3.9 or 5.9% appreciation for homes across the nation. And that leads to what Fannie Mae and Freddie Mac just did is they increased the loan level, the conforming loan level limit to 766,550. So that's just telling everybody that these government agencies or entities are not seeing values go down. They're increasing the loan limits so that more people have a opportunity to get into a conventional type loan because they know that house prices are going up, mortgage amounts are going to need to go up so that people can get into a home. Now they can get into a home for what, 825,000, 800,000 for 5% down. That's great. That allows people to move to the next step and not have to come out of pocket with a ton of money.
I like how you did that backwards math, John. And another thing out there, of course, that's a $40,350 increase from the previous conforming loan limit, last year's number. Lisa brought up the FHA loan limit, $498,257. Now you're buying with 3.5% down FHA housing over $500,000.
That's exactly for FHA. So maybe you had a little hiccup in the past with your credit. Maybe something happened. People have issues all the time. It could have been a medical bill or a collection, or it doesn't have to be perfect credit. You could still get a home, $500,000 easy.
Yeah, we actually can manually underwrite some of these files, 580 and above credit scores. If you've got a better loan to value, in other words, you had that foreclosure, the past bankruptcy, you fit into the FHA box. Definitely, we can run some numbers for you to see how this works. If you go 10, 20% down, even with those really low credit scores, those files are getting approved.
Absolutely. So again, it's people who are getting nervous and they're afraid to make the call. They think because they had a bankruptcy 3 years ago, they're a lost cause, and that's not the case. And maybe you haven't taken all the steps you've needed to reestablish credit after bankruptcy, but give us a call. You could be really close. Maybe you just need a couple more months, or maybe no one's explained to you what you need to do, but you can get a house within 12 months easily with some established credit history. So, definitely give us a call. It's not for long. You don't have to be a renter forever. You don't have to live in your family's basement forever, whatever your situation may be.
For sure.
We can definitely help you get a home.
Hey, John, how about this? I saw that you got your projections up for December, and it looked like it was about 90% purchases, of course. And the purchase index was definitely 19% lower, almost 20% lower than it was in 2022. However, a lot of families, John, just like your clients, they found this little opening right now where there's a little bit less competition for all those offers.
Well, yeah, purchases are going to be down because of the interest rates. That's just the way that people think and move. But like you said, Harv, people still need to move. So they're making the choice that, hey, all right, I can get into this 8% interest rate, 7.5% interest rate, and still be able to save some money from good advice from people like you, Lisa, Becky, myself, Harry, where we can talk to you about, hey, sell your house. Use some of that money to pay off that extra credit card debt you have. Get into the new home. Yeah, you're going from a 3.5% rate up to a 7.5% rate. But look what you're saving on a monthly basis by doing this and getting rid of your credit card debt. Now, the number one thing is don't get yourself back into credit card debt. That's not a get out of jail free card and you can just continue to do what you normally do. You have to be smart. You have to look for the future. How can I save money? And because if you put yourself back in credit card debt, then yes, you put yourself backwards and now you're spending more money. But we can figure out a way for you to save money, sell your house, pay off your credit cards, and also get into a new mortgage at a higher rate, higher balance, and still save you money on a monthly basis. And that's what a lot of these people are seeing, and that's why we still have so many purchases going on.
Yeah, I just did one not that long ago. Somebody sold their home, had a ton of equity. I mean, a real big chunk of equity. Paid off all their credit card, literally every single credit card, still had $60,000 left over for a down payment on the new place. So it worked out perfectly for them. The new payment was, yes, higher than the payment they previously paid, but they had gotten rid of $2,700 in other monthly debts.
Wow.
Cash flow increased like exponentially. They were so happy. So yes, the payment was $500 more, but there was still $2,200 in the green from what they were paying with all their credit card minimums and car payments and everything else. So there's ways to get this done.
How good does that make you feel, Lisa? That, even though it's just simple math and understanding how it works, it's still, there's not many people like you or us that understand how how those numbers work and how we can help people save some money. So it always makes us feel good, especially around the holiday season.
People really like at the point where if we didn't do something, they were going to end up missing mortgage payments. And some of this is all about timing. Sometimes, and I hate to say this, I want to bring it up, people call us, it's too late. They've already missed the first mortgage payment. They're 30 days late. They're trying to figure out where to come up the money for that. They're about to miss the 60. And then they're like, hey, can you help me? Can I use some of this equity or can I do it? By the time you're already at that point, it's very hard to close and sell on a home in a month or two. You know what I mean? So you don't go into foreclosure, but we've already got mortgage rates on the credit report. The best time to do these things is right when it's tight and you're like, and you're not exactly sure. And this family was on the brink of that. They were about to be like, I'm not sure where I'm coming up with this mortgage payment. We have to close on time, but it worked out perfectly for them. So, but you gotta know the risks, understand exactly what you're doing and listen carefully and be on board.
Because I hope the highest of the interest rates have already passed, or we've already seen the highest of interest rates. Definitely the last 2 to 3 weeks, we've seen a reduction in mortgage interest rates. Some conventional buyers could even drop below 7%, maybe with a point or two, maybe without good credit, 20% down. So again, interest rates are starting to improve. Now, we want to urge that everybody, if these continue to go down, this is going to double, triple the amount of buyers out there because there's so many people on the sidelines that are really interest rate cautious. Yeah. They already know, and again, we're going to continuously tell them, John, these home values are going up. So maybe there's this little window of opportunity. You get in it for a little bit less money. Maybe it allows you to, continue moving forward. And you're like, maybe the amount that you can afford now, John, with the lower rate, maybe your home purchase price amount can go up a little bit.
Yeah.
We have people who are pre-approved, but as rates went up, unfortunately, the pre-approved amounts went down, right? Because it's based on ratios. So they may have been approved for, we'll say, 300,000 when the rates were 5. But at 7 or 8, they're approved for 220,000 or 200, and they can't find a house like that. Well, now that they're trickling down, I'm hoping these people come back and say, "Hey, let's crunch some numbers. Let's see where we're at." You know what I mean? Let's see what we can do now, because now that they've softened a bit, this might be the opportunity. And people always say it is always a good time to buy a house, but typically right now, wintertime, it is a little slower because most people don't be schlepping their stuff in Michigan in the snow. This is your opportunity to maybe get in, not have as much competition as you did before on a rate that's slightly softened. So, I hope people call and take advantage of this opportunity. I know it's Christmas. I know it's busy, but you got to take care of yourself and your family.
John, radio show. Of course, we're going to be broadcasting the Hardcore Mortgage Real Estate Business Shows back on live on 97.1 The Ticket this Saturday, 9 to 10 a.m. Please tune in to listen. I talk to so many people outside that say, "Oh, Harvey, we listen all the time." Well, one of the subjects we're going to be talking about affects a lot of us: death, divorce, all those bad things that really keep us in our mortgage business moving forward. And although these are very horrible times for these families involved, losing a loved one, splitting up the family, this havoc can be controlled, and you can cause a lot of problems by not having the right people involved. So we're going to talk about that on Saturday's show. Things that you need to look forward to. Again, who's going to keep the house? Is there equity in the home? Who can afford to keep the house, or do both borrowers need to go ahead and move forward? So we'll get into the intricacies of a divorce and all the different things that can pop up on that, John, on Saturday.
Nice.
Sometimes people, as part of the divorce decree, it states that the spouse has to be removed. People don't realize that if you co-signed a mortgage, you can't just be like, I'm divorced, I don't owe it. Well, yes, the document says you don't make the payment, but you're still on the note. You are still legally on the note. It's still being reported on your credit report. So judges usually have in there, you've got 3 months, 6 months, 12 months, whatever they've, negotiated to remove your name from that note, which means you have to refinance them off.
Why so many times we think it's an amicable divorce, but it turns out maybe one person doesn't make that mortgage payment. Now they're not able to even get a mortgage, right? You start getting into 2-3 lates on a mortgage. Now you're getting in a foreclosure situation. So again, having more professionals involved in your situation is going to definitely help you. John, what else you got? Give us a wrap.
I just want to circle back on what Lisa said about, people going out there looking at houses now that the rates have softened a little bit. I want you guys to think about what you would have had you bought at the beginning of this year. Like I just said, 5.9% increase. Let's just call it 6% for easy math. You bought a $300,000 house, 6% increase. That means at the end of this year, that house is now worth $318,000. Now you have to buy that house for $318,000. You get a little bit break in the rate, but now you're buying it for 20 grand more. The offset is 0, right? So you should have bought that house for the 300,000 and then circle back with us. We offer 0 cost refinancing. We got some awesome new products coming out at the beginning of the year. You got to just tune in. And if you did your purchase with us, make sure you check us out so that we can get you some good info on how to get you that lower rate when they come around.
Right. Yeah. Obviously, the year started off back in February of 2023 at 6% interest rates, climbed all the way up to 8% for some folks, maybe just under 8%. Now it's starting to slide back. Maybe again, we continue to talk about this 2-month window of opportunity. We saw it last year. We constantly talk about it. January 7th, January 15th, people get back in the saddle and then they realize, wait a minute, that Christmas party at this guy's house, I want to have my own Christmas party. I want to have my own holiday party at my house. And just how home ownership can really affect their lives moving forward.
There's so many benefits to home ownership. People always talk about the pride of home ownership, and there's a reason they say that. Not to mention financially, it makes sense. You get to write off certain interest and cost, and tap into that equity if God forbid you had to in the future. Obviously we're not into equity stripping, is what we call it, but sometimes things happen, and it's almost like another safety net.
All right, we talked about a couple things in this little podcast here that we present to you. We got tons of information. Again, we're going to be going back on the air Saturday, 97.1 The Ticket at 9 a.m. And again, things hopefully are changing. There's a lot of economic data coming out next week, but we truly all hope that these higher rates are something in the past and that families can just trickle that down a little bit, making housing more affordable. All right, I'll tell you what, I'll let you go. John, if you don't have any last words, I'll go ahead and let everyone go. It's been another version of the Hardcore Mortgage Real Estate Show podcast. Again, we are brought to you by CMG Home Loans, NMLS 1820, 1820, Equal Housing Lender. We'll see you Saturday on the radio show.